Exercise 219, Part 3, asks us to prepare a trial balance. Just a few things I want to point out to you first before we begin is that notice the trial balance starts with assets, then goes to liabilities, then goes to equity, and then goes to revenue and expense. Okay, and that's kind of the way they're always done. Assets, liabilities, then equities, then the income statement accounts of revenue and expense. I'm going to refer you back to this 219 requirement 2 that we just did, and we're going to take each of those numbers and transfer them to the trial balance, observing the rules of debit and credit. And I'm a big believer in checking it off as you do it. So we're going to start with cash, $37,000. Debit to cash, $37,000. I'm going to switch to black to make sure you can see these numbers. $37,000 debit to cash. We have supplies right here, $3,000. Our next asset is land, $24,000. Our next asset is equipment for $9,000. Now I have accounts payable and notes payable. I have accounts payable of $3,000. That's a credit balance, so it goes on the credit side. Then I have notes payable of $24,000. And all we're doing is transferring these numbers to the trial balance, observing the rules of debits and credits. Then we have common stock of $42,000. And I would check them off as I go through. And then I have service revenue of $13,000. And I only have one expense, salaries expense of $9,000. And that's a trial balance. Now, the try in trial balance means to test or to try to see if each side is equal. And to do that, we'll add up all the debits and all the credits, and in a perfect world, they will add up to the same number. If you add up these numbers, it comes to $82,000. If you add up these numbers, it comes to $82,000. The temptation is to add up one side and just put it in the other. That defeats the entire purpose. A trial balance doesn't necessarily guarantee accuracy. It does guarantee that you have carefully observed the rules of debits and credits and you've properly categorized things.